you want to look for signs for value add. That's what I look for. So I don't want a property to look perfect because then there might not be as much potential for
Yeah,
me to
I don't
improve it.
think, you see all these videos on buy real estate, passive income. You know,
Hmm.
you treat it as passive, you're going to get passive income, all right. It's going to pass you right by.
I also want to make sure the rents are far below market when I'm looking at a property because
Well, Sandia, thank you for coming on today. I think your expertise in multifamily investments can really be a powerful thing for our followers. And I kind of want to start by you just telling us a little bit about your background. I know you're the CEO and founder of Engineered Capital. You're a big syndicator around the Dallas Fort Worth area. Do you do anything outside of Dallas Fort Worth?
right now I don't. So I've lived in the Dallas area for 33 years. I came here to go to college for engineering at SMU. And since then, I got employed as a in a Fortune 500 company as an electrical engineer for Texas Instruments. And that's where my career started. And during that process, I realized very quickly that the marketing and business types were making all the decisions and telling us engineers what to do. So I was
Yeah.
like, how do I understand their decision-making process? So my company was kind enough to send me for an MBA. That's where I got all my financial knowledge, underwriting, business, analysis, etc. And that's when I started trading stocks quite heavily. So I was a trader for quite some time when I quit my W-2 to go full-time into trading because I had children and I wanted a lifestyle where I could spend more time raising them. And so a
Yep.
couple of hours a day I would trade, and that was pretty much enough. So the stock market did really well. And then we had a slight tax problem because my husband also had a W-2 and none of us had a business or any other way to defer our taxes. And that's what brought me to real estate. I analyzed some single family rentals, and in Dallas, property values don't appreciate like crazy like they might in California. So especially in the early 2000s and stuff, it didn't make sense. So recently, like about 5 years ago, I stumbled upon multifamily by attending one of those weekend webinars, seminar series.
Oh, yeah.
And you figure out that, okay, you've got to scale. So when I have 100 doors instead of just one door and a couple of tenants don't pay, my income doesn't go from, 100% to zero. And that's where I realized the power and value of multifamily. I used to always think, a $20 million apartment building down the street is owned by some billionaire, like the Trump kind of people. And I realized, no, there's just ordinary, everyday people like me who do this syndication, where
Yep.
we pool our money together. And the people who want to run the deal, they're the general partners. And then I could be a limited partner, which is how I started out. And then as I learned the business, I became a general partner myself. So
Okay.
that's what I do now is full time into apartment investing with a focus on operations.
Okay. And you have 1,400 doors under management right now, correct?
Yeah.
Okay. Now,
All
do you
over
guys
that.
self-manage?
No, we hire third-party property management companies,
Okay.
but we are asset managers. And because I'm local to my properties, they're all like within a 30-minute drive of my house. I'm able to visit them frequently and make sure, when I hear something in my weekly asset management calls, that it actually gets executed, and it's
Yeah.
a, trust but verify model. And that's worked out very well for us.
And this is kind of a caution to all you newer investors. If you're going to use third-party management, let's say you're in California, and this is how I bought almost all of our properties in Dallas in the beginning. All of our
Hmm.
multifamily was we ended up buying properties that were mismanaged because, and I can give you a prime example. The last acquisition we had for multifamily that we actually sold out of it already. The management company, it's a 73 unit, and they
Hmm.
had a manager, an assistant
Hmm.
manager, and three maintenance guys.
That's a
And
lot.
it's too much.
Hmm.
And the investor was from Northern California, didn't really understand the business, just wanted to own property in Texas. And he was losing it. And so we got hold of the financials and we took a look at it. And the salary for just the manager herself was double the market. And
Mm.
then they were billing the three maintenance guys. One was actually working on the property. Two were working at another property that the management company actually owned down the street. So yeah,
Yeah.
yeah, it was. And the manager asked, "Are you going to keep us on?" And we said, "Well, we can't afford to." I said, "Your salary is double the area,
Mhm.
everybody else in the area." And she goes, "No, it's not." We showed her the numbers. She goes, "My God," she goes, I'll show you my paycheck. I get half of it." So yeah, yeah. So you've got to really, and you're right. You want to make sure boots on the ground, or, you really trust this, get a really strong referral for a property management company, because every property we bought in the beginning in Texas, it was because of situations like that. So,
Yeah,
um,
for sure.
so let's start off. I think, you've decided you're going to do buying some properties. How do you choose the area that you're going to be buying? What do you look for?
So I've lived in Dallas for 33 years, so I know my market extremely well. I probably drive by all of those areas. But the biggest criteria you want to look for at the macro level is population growth, job growth, median household income, and diversity of jobs. So if you look at a recent U-Haul report, it's going to show you that Texas is #1 state for people wanting to move to. So that means you are exploding with enough population to where you have enough pool of renters. You want to make sure you have enough job growth and diversity of jobs. So what kind of companies are moving their headquarters? Like if you look at Irving, it's one of the suburbs of Dallas. I mean, we've had such an explosive growth in that area that, you're getting a $65 million renovation by a Ritz-Carlton as an example. Caterpillar moved its headquarters from, Illinois in 115 years. They moved it to Irving, Texas. So you want to look for signs of job growth, population growth, but you also want to have a diversity of jobs, right? You don't want to be dependent on one primary, let's say a military base. So when it shuts down, your jobs go away. So those are the biggest macro conditions. And then at the micro level, I look for the median household income is very important, because let's say you plan to charge a rent of $1,200, utilities, etc. It's about $1,500 a month for this renter. If you multiply that by 12, you're at $18,000. You want to be at a 3x factor. So 3 times that is about 54K. So if the median household income in that 1 mile radius, 5 mile radius is only like 35,000, that renter is not going to be able to afford the rent for your property. That's a very important factor, because if you don't have that, you're going to end up with a lot of delinquency. So that's very, very crucial. The other factor I look for is crime stats. So I want to make sure the property is safe, because I want to attract that single mom. I want to attract families with children to be able to play freely in the playground, etc., in my apartments without being afraid. So I look at the police reports, I look at crime stats, I look at neighborhoodscout.com, for example. And this way I know that I'm not inviting drug dealers. So it's not just the apartment itself, but it's also the vicinity. Do I feel safe driving there in the dark, right? At nighttime? What kind of activities are happening there? And what kind of businesses are establishing themselves within 1, 2, 3 mile radius? I like looking for schools, for churches, for, everything that is family friendly. That's crucial for me, because I'm not experienced in fighting crime and turning around a property. So I don't want to deal with that. I want to have as many tailwinds as I can. So is it an area where I would want to live? So that's one of my criteria. And so when it satisfies all of this criteria, then I know that this is a place I want to invest. So for me, because of my knowledge of Dallas, I already know my suburbs, just like you do, right? If I tell you Irving, you're going to give it a thumbs up, right? Yeah. And if I tell you South Dallas, you're going to be like, maybe not, right? So we already know those pockets. And that's a big advantage. So make sure you discuss your property with somebody who's local, even if you're located elsewhere. Have a friend, have a buddy, have somebody local to the property tell you what that area feels like. Because there's things you'll know as a local that you just don't know as a remote investor.
Yeah, I agree. Now, once you found your location, you go out and drive the property. What are you looking at when you're driving the property for the first time?
The first time I like to do a competitive analysis. So if I'm going to drive to the property, I also want to drive the competitors. So you want to look for signs for value add. That's what I look for. So I don't want a property to look perfect, because then there might not be as much potential for me to improve it. So in the sense that I want to analyze the rents that are competitive for that subject property, as well as all the properties around it. So if I'm a potential renter, and I go to subject property as well as the other properties, why would I choose one over the other? What is the differentiating factor? So then I know that as an investor, I can go in and improve the amenities to be competitive. I also want to make sure the rents are far below market when I'm looking at a property, because if it's already the white elephant on the street, if you will, it's already at the top of the market, then there's not much room for me. So I want to look for organic rent growth. I want to know if the units are really a true apples to apples comparison. So if I have a property next door that was recently built in the last 5 years, and my subject property is like 70s and 80s, it's not a true competitor because the newer property is going to command a higher rent. So what is a true comp, right? A truly competitive analysis would involve something within a 1 mile radius, ideally situated on the same side of the highway, etc., and a similar vintage, because then that's a competitor, right? And then I go analyze, okay, what does my roof look like? If I'm just doing an exterior drive-by, maybe next week is my walkthrough with the broker. So I want to do my initial drive-by to analyze this property and see what makes it a potential, what are my true questions I want to ask when I get that 30-minute block with the broker, as well as potentially that local property manager. So you want to look at your Yelp reviews ahead of time. What do people say about this property? Because if you see a lot of negative reviews, it means it's potential for you to go fix it by saying under new management. So every challenge, you can see if it's something that you can fix. You want to look at the concrete, right? You want to drive around the property and see how much the driveways and concrete looks like. Is it in need of a lot of repairs? Because those cost a lot of money and your lender is probably going to require it. If at all possible, do a drone footage of the roof. If it's a flat roof, you're going to have leaks and other problems. So note that. What is the curb appeal? How is the signage? Does it look like it's the buildings are going to need a lot of deferred maintenance? If you get down and walk around, how do those stairs, the railings, all the siding and all of that look like? If you can go on a rainy day, it's even better because you can see where the puddles are, the pooling, the drainage, all of those kind of challenges come about. So there's just so much you can do from a physical drive-by of the exteriors that when you finally get the chance to go with the broker and do the interiors, you want to also try to see if you can take some trades with you. You might have some innate strengths about construction yourself, but once you've done that exterior and initial drive-by, you could tell your trades like, hey, tell me how much that concrete repair is going to cost me. Tell me how much this, roof looks like it could use some damage. I don't know how it did from the last storm, but that's a flat roof. Where am I, how much should I budget for those leaks, etc. But take a trade with you. If you want an electrician, plumber, or anybody else to come along with you, take them with you to give you, like, do they have stab lock, old kind of panels? What is the city's code compliance requiring? So if you can speak to somebody who already owns a property within that city, and I mean little city. I don't mean just overall Dallas, but like Cockrell Hill is a little pocket versus Irving is a little pocket. Their code compliance departments might require different things than, say, if you own a property in Hearst or Carrollton, right? So the more you know ahead of time, the better you can budget for all these repairs and requirements by the 3 different bosses you're going to have. Your first boss is your lender. Your second boss is your code compliance department of that city. And your third boss sort of is your insurance company. What might have been okay 2-3 years ago, like I'll give you an example, the railings, right, on some stairs, the distance between those bars. You could have been at, 6 feet or 6 inches before. Now it's more like 4 inches. So all those little things, if you're up to standards for city's code compliance, typical lender requirements, and typical insurance requirements, you can truly budget for the cost of your repairs and deferred maintenance and put it into your CapEx budget as you assess a property. And all of these exterior things you can do before you have that actual tour, especially if you have a local who's boots on the ground or you hire somebody to go do this checklist for you. It's extremely valuable in budgeting ahead of time for these repairs.
Beautiful. Well, everything I would add, when we go out and we look at a couple things too for security. Is it fenced, obviously, and is the gate working? Lighting, where's the lighting, and for security. Then also, have they trimmed the bushes so nobody can hide behind them if they have bushes out there? Those are other things that we always looked at, because we did in Dallas, we were doing B-, C, maybe even, I think I'm being generous on a couple properties. They might have been solid Ds that we were converting. So yeah, we were doing that. What amenities do you look for? Do you have specific ones you like, or do you just plan on adding them once you acquire?
So I love properties where we're adjacent to a park or a school. So then I don't have to build a playground or maintain a playground in my property. So that's always a nice perk. A dog park is a nice addition you could do yourself. It's not super expensive to do, and that way you can invite pets, because pets are a nice, free money, if you want to call it that. You get a pet fee and then you get a monthly deposit. It doesn't cost you a whole lot. I always like to look for washer dryer connections and adding washer dryer connections or washers and dryers, depending on the vintage of the property. Because in some cases, that drainage and the plumbing may not be able to handle it, but that's an amenity that residents love and are always willing to pay for. So you want to think about, okay, just because I put a granite countertop and stainless steel appliances, does somebody really want to pay an extra $300 for that, right? Versus if I put washer dryer connections and provide the washers and dryers, they'd be happy to give me $50 or $100 more for that. So I always try to see what amenities are useful for my demographic. What do they appreciate? For example, if I put in basketball court, is that demographic really going to appreciate it, right? And is that something that's going to generate revenue for me? Probably not. So those are the ways that I look for. I like the curb appeal. I really think you can do a lot with curb appeal, the drive up appeal, etc. And if you're already adjacent to shopping centers, etc., that's helpful because a lot of them might be sharing one car, some of these families in your C-class apartments. So I look at the walkable distance, the proximity to schools and churches. But physical amenities in a property, the layout. How nice and easy and accessible is the layout? If they have gated entries, I almost worry because why are you having a gated entry? Apartments should be open, peaceful, nice, open areas. So if you have a gated entry, it means there's some kind of a problem in that area. There's some crime issues. Do they have a courtesy patrol? If you look at their T12 in their expenses, did they pay for courtesy patrol at some point? What kind of crime has happened in that vicinity, even if it's not specifically at that property? I, in fact, avoid places that have that security patrol because now you're talking about, either a very fancy neighborhood that needs gated access, or you're talking about a problem area where crime has happened in the vicinity that you need to control the access. So in both cases, I question that. Those are not easy to maintain, those are rolling gate thingies. And so I'm like, why are we having gated entry?
Yeah. That's what we specialized in, was those lower income areas. And so the gated was, we were in areas. Yeah, it was tough areas. So and they help, but we had cameras up, we put cameras around the property. We tried the security, but you didn't have the people figure out the schedules and we had a property behind us that was, and this is why it's so important to drive the area, right? So we had a property behind us that was just gang infested. And then there was a vacant railroad track behind the property. So they hung out there all the time and they'd be shooting guns constantly. And that's that other apartment community was allowing it. So you really need to go around to all the apartment communities in the area, go in and talk to the property manager and say, listen, I'm thinking about buying this property next door. Tell me the good, the bad, and the ugly about this property. What do you think? Would you buy it? And most of them will sit down and be very honest with you.
Yeah. So don't go around the 1st of the month. That's a very busy time for them. But try to go on the 10th or later and actually offer them a Starbucks gift card. Be patient and sit and chat with them. And they'll be open to even letting you visit one of their vacant units. Because then you get a true feel for, is my 1 or 2 bedroom a fair comparison to the subject property, right? That's really useful. The other reason I like to stay away from high crime areas is I'm not attracting the tenants that I want. And if you drive by at night and you see all of these signs in there of gang activity, either funny smelling, drugs, etc., as you walk near the apartments, signs of shooting, people are fearful. You want to look at the local police report. I really highly encourage them. Go look up that city, city of Irving. What are the crime that's happening there and what kind? Is it car theft or is it more than that? Is it violent crime? What reports have you heard from this particular apartment complex? And I just steer away from those. I want to feel safe visiting my properties, which I like to very often. Things like cameras and exterior lights are some of your best things to add. So the first thing we always do when we take over a property is we add exterior lights so that the visibility is really high at night, motion sense lights, and also a camera that literally I can pull up my phone, click an app, and that app is going to show me who is at any property in my portfolio. I can see what time the leasing manager showed up. I can see what's happening at 10 p.m. or 2 a.m. if I want to, in a parking lot or in the leasing office. And that's a no-brainer. That's one of the first things we do when we take over properties.
Yeah, I don't think, you see all these videos on buy real estate, passive income. If you treat it as passive, you're going to get passive income. All right. It's going to pass you right by. Yeah, you've got to treat it like it's an investment. It's your money. You've got to be on top of it.
The only
Um,
way it's passive is if you are a limited partner with an
yeah,
operator who you actually trust. So know, like, and trust, but it's really not truly passive. I still recommend being an active passive investor. That means up front, when they give you all these projections, you want to question that. You want to say, who gave you those numbers for rent increase? Did your local property management company actually agree to those numbers? Have you seen those numbers in that area? Can the median household income justify it? Has this operator operated similar properties in that area before to be able to give you confidence in those numbers? Did they check their taxes and insurance correctly? So every number that they put into an underwriting spreadsheet has to be verified by a neutral party. So whether you're the general partner who wants to buy these or you're a limited partner, it's the same question I ask. Where did you get those inputs? Who told you you can get that rent? Who told you you can charge $50 for a parking spot? Where have you seen that? Is that commonplace? Do people charge for parking? How huge is the layout of that space? Is somebody really going to pay you an extra $50 to park 10 spots away when they're, a lot of these tenants, like they barely have the money to afford everything that they need to. They don't have that extra income if they have a car theft or some insurance loss that happens to them. So I question that. So you want to really get to know, like, and trust people, not just based on a social media post before you invest with them. And the passive part is that, yeah, if there's a fire in the apartment, you as a passive investor may not have to deal with it, but I would still look at least once a month at those monthly financials, see the trends, see if the operator is hands-on. Because if they're doing everything as remote operations, you're going to see a decline in financials or missed opportunities for increasing that net operating income.
yeah, yeah. I want to touch on Performa here in a second, but I want to tell one story. And you and I talked about it before we started recording. Is a property we bought. The syndicator, the syndicator contract. They front load those fees and they're out. And so I don't know if anybody that invested with that guy, I'm sure the bank owns it now. So you got to be careful. You were talking about all the numbers, and one thing as an investor you got to watch out is performing numbers. That is something. Those sneaky little brokers, I am one, so I can call them that. I probably should probably even a little harsher, but they'll do performing numbers. Can you touch on how you break that down?
Yes, the most important thing is for you to do your own competitive analysis. So if you're able to drive the property, great. But if you're remote and you don't have time to drive the properties, at a beginning, you want to look at everything on a map and see what is my true competition. It may not be the ones on the broker's list. The broker might list the ones that are the most expensive with the highest rents to tell you, look at your potential. But the ones next door, the ones within a 1 mile radius, you can look at it on Google Maps and figure out who is your true competition, look up their websites, at least call up every one of those properties and verify the rent numbers they're getting, and get a feel for the amenities. You can ask basic questions like, what does my interior look like? Do I have stainless steel appliances, granite countertops? Do I have washer dryer connections? Whatever, is there a fireplace? Is it vaulted ceilings, right? What are all the nicer amenities that next door property might have? Typically, a CoStar report will tell you a lot of the information, but you can call and verify those numbers. That's super critical because otherwise, how are you going to know what your true positioning is in that market to see where you can add value? So you must do your own competitive analysis. You need to ask about the same list of amenities. So have your checklist of 15 questions, pick up the phone and call them. It's such an easy thing for you or your VA to do. Just know what amenities they are. See if they have virtual tours, because then you really know your subject property versus its competition. When you decide to visit the property, make sure you visit the competitors as well, because that's how you know your positioning. That's what's going to determine your rent and your rent bumps. So you ask simple questions like, what is a renter willing to pay more for? Typically, they'll pay more for washer dryer connections, but are they willing to pay $300 more just because you put nice new granite countertops and stainless steel appliances or new flooring? Is that realistic? The second part of doing a pro forma budget is, if you look at your rent roll, a lot of leases don't all expire January 1st, right? People are going to move out throughout the year. So if you are going to get a $200 rent bump by doing your upgrade, when are you going to realize that money? let's say it's going to be June 1st that you acquire this property. You can only affect leases that are 60 days out. So it's only really August leases that you can start making a difference. So when somebody moves out, it's going to take you at least a week or two to rehab that unit. So then maybe it's August 15th that you have access to that unit to truly charge this extra $200 rent. So this $200 rent bump is really effective only for 4.5 months of the year. So Unit 101 is going to give you that extra $900 for 4.5 months only in, this part of the year. It's not from January 1. So be realistic about your 12-month increase of net rental income by studying that rent roll and seeing the actual move-in dates of new residents or renewals when you can affect that rent bump. That's huge. Validate the sources of other income. If nobody's been charging for parking in the last 12 months in this property, are people going to be really ready to say, oh, thank you for letting us stay here. Here's $50, right? For free. That may not be realistic. Is it even done in the competitors nearby? So you may have to take over the property, do a survey of residents, offer it, and see who takes it up. So that's not guaranteed. So if you factor that into your other income, that may not be realistic. Versus, okay, an admin fee, an application fee, a late fee, those might be realistic assumptions for your sources of other income. So that's a big piece of your pro forma, right? Your rent is the meat of your earnings. And then your other income. And that's what adds up to your total income. The next thing is expenses. You have controllable and you have non-controllable expenses. So salaries are going up in those areas. It's hard to keep maintenance guys. It's hard to keep a good property manager. And sometimes it's worth paying $10K extra for a really good property manager because they're going to fill up your units and that's going to be important. So be realistic about your salaries and your operational expenses, your admin expenses. If you're planning to do a lot of rehabs, what is the cost of rehabs? Costs are only going up. Nothing comes down, right? We're all seeing it over the years.
Well, rents might,
right?
So rents might come down on you. You got to know.
That's right. Your rent might come down, but not your expenses, not the cost of rehabbing your units. So are you looking into bulk purchasing some of your materials? You have to rehab 50 units and they all need new floors. Does it make sense, therefore, to find a vendor to provide that to you in bulk, right? Are you doing your make-readies in-house or outsourcing it? Contractors charge a very different price. So if you don't have somebody who's digging into the details of construction and you have about a dozen different rehab projects, you want to get actual quotes from contractors for all of that and figure that into your budget. So that's how you put together a realistic pro forma, and you want to have a rainy day fund because there's always going to be repairs that you didn't plan for. No matter how closely you do your physical due diligence, your lender might come back with a repair that you never thought of. Your renter might require new signage, restripe that parking lot, put a nice handicap sign. You need to have a handicap ramp here, whatever else, right? Repair that parking lot, repair that roof. This drainage isn't right. Here's a leak. Whatever else your insurance company might also come up with. Plus the code compliance in one city is so different from the next. So the requirement of fire extinguishers, smoke alarms in every unit, carbon monoxide detectors, blah, 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 right? So always have an extra 10 to 20% budgeted for unexpected things that you don't have on your list, master list, even after doing a physical due diligence.
And concessions, a lot of newer investors, they don't think about concessions, and you start giving, 2 weeks, 4 weeks, 6 or 8 weeks in concessions, that starts to hurt. I've seen some new investors like, no, you need to go get this rent roll. You'll get your estoppel certificates to see that these are true, but you got to be careful with this. And now insurance is getting to be a big issue. Are you guys are probably feeling the pain a little bit, right? Like everybody else?
Yeah, I'm lucky that I'm in Dallas, so I don't quite have the insurance increases like Houston, coastal cities, or Florida. But I am seeing an increase. A couple of my properties, we had about a 25% increase in insurance compared to last year. One of them, we stayed the same, for which I was really happy. So you need to be in touch with insurance brokers and ask them what is happening. But that's where it helps to have a network of apartment owners and investors in your local area, because their renewals might have already happened and now you know what that's like. The other thing is keeping in touch with the property taxes. In Texas, that's huge. In some other markets, it may not matter at all. but our property taxes keep increasing depending on the county because we don't have a state tax. And so
Right.
we always want to be in touch with a property tax protest company who gives us the pro forma for the coming years. Oh, Dallas County is getting really aggressive. Expect this much of an increase. This is what
We
we're
know,
seeing
yeah.
with our customers, right? Versus
Yeah.
Tarrant County is really bad with taxes, right? They overcharge you and we had to litigate it. You know, in the past, we've been able to protest it and just get it done. We had to hire a lawyer to go litigate it, right?
Yeah.
So you need to be aware of what is happening if taxes are a big deal. So something else like insurance might be a very big deal for you in your market. So
Yeah.
you want to get professionals who are neutral, third-party professionals who see this and do this for a living day in and day out to give you accurate numbers for your pro forma. You want to hire a property management company if you're not doing it yourself, who is a very strong presence in that local market, has at least thousands of doors under management, so they can give you very realistic budgets. And ideally, you want references. If you're coming in new to a market, you want a reference from somebody who's already running properties there to give you a reference, just like a contractor reference that, oh, they do a great job, they stick to their budget, they can actually achieve the numbers they give you. Because sometimes they'll give you unrealistic budgets just to win your business. And then they'll just do business as usual. And guess what? Oh, well, this is what happened. We can't meet your numbers. And then you're stuck with them. The process of changing a PM is painful with your lender, etc. It's not something you just snap your fingers and say, hey, you're fired. I wish it works that way. So you got to go through all of this paperwork, etc. And then they stick you with a lot of bills. So you want to try to avoid that process by selecting them very, very carefully. And I have a long, checklist of questions to ask if anybody wants access to that, to do a proper due diligence before hiring a PM company.
Yeah, I'll and if anybody watching this has questions, just put it in the comments and I'll make sure we get to them for you. Now, the insurance claims is something that we always take a look at. How many claims we had? I mean, we bought a building over on not too far from you, and it had a whole new building because of a fire.
Mm,
And it sounds good, but your insurance is pretty
your
high on
rates
that
are
property.
going to skyrocket if they have
Yeah.
loss claims. Another thing to watch out from an insurance perspective is when you do your drive-by of the property, even if it's in Dallas, right, which is not near any kind of an ocean, you drive around and you discover that there's a creek running by behind it. You might think there's only 2 buildings in the floodplain. Insurance might say it's actually 15 buildings in the floodplain, and your
Right.
insurance rate goes through the roof. So you want to be aware of little details like that. So you want to get a quote, not just based on your location and your number of doors, etc. You want to actually look at that physical layout and say, hey, there's a creek running by near this property, or there's a lake or a man-made little pond, and is that going to affect my insurance rates? And yes, claims are huge. Past
Yeah.
claims in the last few years is going to hugely affect your insurance rates. So you want to be
Yeah.
careful. You want to know what your deductible as well. And you want to try to have renters insurance when they move into your property. Because if they have a fire and it affects the unit next door as well, I mean, that's a lot for you to have to worry about.
Oh,
So
yeah.
you
Yeah. So we always check the insurance certs and the claims, making sure everything's on par. Now, you in Texas, this is something that just baffles me in some of these areas.
Mhm.
$50 moves you in for the first month. That was insane to me. I'm like, who does this?
We don't do
And so we
that.
didn't do it. We're like, first month's rent, and it hurt, because everybody in the area was doing $50 move you in, but they were flipping those units constantly because people would move in on that $50 and then they would stay the part of the next month until you start the eviction, and then they'd leave. They just skip
Mhm.
to a building
Yeah.
next door. So how are you guys? I'm sure you guys aren't doing it, but how do you guys vet your tenants?
So my biggest challenge with occupancy has been very recently with very small units. So we are having a hard time filling up efficiencies and 1 bedrooms at a couple of properties, but
Most
we haven't had the
transient.
problem with the larger units. So what we're doing is we're offering no admin fee or
Right.
waiving the application fee, but we're having it for a 2-week period. Like where it's not endlessly, it's not into February and March. As an
Right.
example, it's only for the month of January. And so you've got to still pass the credit check and all of those requirements. So we try not to reduce our rent because that affects our rental income, that affects when we report to the lender, etc. So we try to offer a free amenity. So we might say free parking or free Wi-Fi or no application fee or whatever else waived, but we try not to reduce our rent. That's
Yeah.
our, we might keep the rent the same on a renewal without
Yeah.
increasing it so that we retain those tenants. But on new leases, we don't want to go below market as much as possible.
Yeah. Yeah. One thing that we used to do that worked very well, and for my regular viewers, they're going to be like, Joe, you keep talking about, but we did an accent wall. So we went to Home Depot, bought 5 different things of 5 gallons of paint, and you got an accent wall. You tell us what color you want, and we'll give you, it's an extra $20 a month. And man, did that skyrocket. That was one of our biggest ones. That worked very, very well because people like to have something a little bit different than everybody else, right? So that worked,
Mhm.
and then your handyman can paint that in just a matter of a half hour and for an extra $20 a month. And then we built carports, and so it cost us $750 to build the carports. We had 400 units. We put down, I think it was like 80 carports, and it cost $750 to build them. I think we're charging an extra $50 a month or $70 a month. They filled up immediately. That was
Nice.
another way that we really, because Texas in the class, B and C where we were at, were not, there wasn't, it was just your car set outside all day, so
Or
they
sit
like to have
outside
that.
all day.
Yeah.
Reserved parking is what we always push first
Yep.
because it's the cheapest. So we
Yep.
number every parking spot and then we
Sure.
just pay, spray paint the word reserved into it.
Right.
And then that gets us an extra 25. And then
Yep.
carports is like it's actually more like 1,200, 1,300 for us now to build it. You got to get a permit, etc.
Yeah.
So we have surveyed residents to see if they need it. And based on the cars in my parking lots, they're not too fancy, so they haven't really been a big push. So we
Yeah.
haven't quite done that yet, but it's
Yeah.
something we'll do based on a survey response,
Yeah.
probably.
Yeah. That was our best. Those two are our best, and they worked very, very well. So, um, now let's talk about, we talked about checking on, what about rent registration? You guys go and check that right away, making sure I'll register with the state. Do you have your manager do that?
For the property itself?
Yeah, for the property itself. That's
Yeah.
another thing that I think a lot of newer investors, they don't think about doing. So can you walk us through that process?
The property management company takes care of it for us, so we're not as
Okay,
involved in
you don't
that
have to do
process.
with it. So you want to make
Yeah.
sure that your properties are registered. And they're pretty big in Dallas. They're on that fast. If you don't get your rent registration fee in there, they will let you know very, very quickly. And there's
Oh yeah.
some buildings when they're putting them on the market, they haven't done that. And so you got to make sure that you get that. I'm
Oh
sure it's
yeah.
just not Texas. That's just a market I know.
Yeah, they'll be after us for that, as well as, all the fees associated with the city and the inspections being done on time. So your lender, your insurance company, and your city also send inspectors annually. And as an asset manager and local operator, I try to meet them and visit with them because when they know that the owners are serious, they'll sometimes kind of say, okay, if you think you'll do this by this day, I won't list it on the, I won't ding you for it kind of thing. And
Right.
sometimes we just bring like a pail of all these smoke detectors, etc., that the residents sometimes take off and put it in the trash can, and my
Sure.
maintenance guy will install it right away, and they know, okay, I know you'll do it, so I
Yeah.
trust you, and so they let us buy. But that
Yeah.
relationship is really important. So whenever
Yeah.
possible, try to show up for those inspections.
Yeah, that's a very good point because we think as we're the owner, the management company is going to handle it.
Mm.
You would be surprised how powerful that is, that if you as the owner can take the time to go out and meet the inspectors yourself and have a conversation with them, that pulls a lot of weight,
Mhm.
you
They
know.
know that we're involved. They know that we're local. I tell them where I'm located, etc. And then the lender inspector, we had our third year of inspection. He's like, I really appreciate you coming every time. It gives me confidence that you're going to take care of things. And I can see that you took care of the other stuff already. That
Yeah.
makes me very happy. So, that relationship does matter.
Yeah, it does. So we were, the property I was talking about before, where the neighboring property was just, it was all gang infested. I I got to know even our city council member came out. I just said, you've got to see what I'm dealing with out here. I need help.
Hmm.
And he was a huge help. And because I like, listen, we've got families here, and they're dealing with gunshots at night because of this vacant railroad track. And he was a huge help for me. Now I don't know how that is in most states. In California, that'd be a little harder to do, but in Dallas, he was very. Jerry Allen was the guy. I don't know if you know who Jerry Allen was, but what a phenomenal city councilman he was, and he really was a huge help. you
So
know,
there's
so.
two things we do when we have a crime problem. There's only one property where I had a little bit of a drug issue, is we gave one of our units at half, 50% off rent to a police officer. So there was always a police car parked in our property, and that really helped. They just went a few doors down to do all of their
Mhm.
nefarious activities. That helped us. Of course, your exterior lights being extremely bright and things being captured on camera and sent
Yeah.
footage to the local police helped a lot. And we always do National Night Out as a celebration at our property. So we bring the police squad in there, they bring their SWAT team, etc. Sometimes they have a dog with them, etc. And it's a lot of fun, and we make it a festive celebration. But the most important thing being that everybody in the property has a chance to know and meet our assigned neighborhood police officer. So he's more of a friend rather than somebody they fear. And that helps us a lot in reporting things. So that naturally, by doing community activities on a regular basis and asking them, that residents, what is happening, what concerns you, etc., and report any bad activities to us. And there's an anonymous tip line where they could report it. That really helped us. So I'm getting funny smells from this, or this guy is making a lot of noise at night and something's going on, kind of thing, or the windows are open on this vacant unit and I think somebody's occupying it at night, or whatever other challenges you have.
Mhm.
If you have community activities, which we're big on every month or at least every quarter, it's
Oh,
huge. So we
yeah,
do like pictures with Santa, free Thanksgiving turkey, Halloween costume
yeah,
contest, back to school bash, pool party, Easter egg hunt, a healthy lifestyle kind of thing in January, etc.
that's
And
great.
Valentine's celebration, just simple little things that don't cost you a lot of money. And bringing a fire truck to your property is so fun for kids. So we again
Mhm.
try to do a lot of family friendly activities that helps promote a sense of community. So people know each other. And so people know when there's strangers in the property who shouldn't be there. They have a connection with our property management. So when there's problems paying their rent, right, because they lost their job or something, it's a conversation rather than it's a closed door and I'm going to stay here as long as I can. And it's you versus me and all of that. It's a relationship business. And we retain tenants a lot more. And so our target is like at least 60% retention or better on renewals.
Yeah, you know what? That's a huge thing for everybody to understand that, you know, for to lose a tenant, especially if they're trying, I mean, you have to
Mhm,
kind of vet it out, right? You have to bring
mhm,
them in and sit down and have a conversation with them. And we've done that a lot, but
mhm.
there's also programs through churches and other
Yep,
organizations that
yep.
help them get back on their feet. And so, that's why you really being involved in your community is so important because there's these
It's
programs
huge.
that will help, that can really help somebody that truly is trying. We had one lady, she was a single mom, two kids, and she was struggling a lot, but her church stepped up and helped her a lot. Then we started doing events with the church right on our property. I mean,
Mhm,
I think we had 7 acres on that property, so we had plenty of room, and we had its own little park, and so they got involved in just building that community.
mhm,
The church helped a lot because we
mhm.
got a lot of people from the church wanting to be in that community, in our apartment building, our apartment community. And I think you have to really understand that building that community, that sense of community, is very powerful. It can save you a lot of turnover, because when you lose a tenant, the turnover cost, especially now. I don't know what you guys are spending on turnovers now, but you've gone up, what, 30% over the last 2 years?
Yeah, easily. Like what I could do less than $1,000 in the past, I'm going to be at 1,200 to 1,500 on a basic turn.
Yeah.
So, and I'm
Yeah.
trying to do it
So,
all in-house instead of
yeah.
contractors.
Yeah. And you lose downtime, and vacant
Mhm,
units are,
mhm.
and another thing that I want to caution everybody, if you're going to do C, B minus C properties, if you've got a broken window or lights out, I'm sure your management company's on top of it right away. So, that was our number one thing, get that fixed right away because I don't know if you know the broken window story, but if you allow a window to be broken, then you're just going to find that there's going to be
Mhm.
more that are broke. So, really maintenance. Um, are
Yeah.
there any other tips that you can give our followers that you think is
So
key?
walking the perimeter of the property is crucial. So if you're sitting in California with a property in Texas, hire somebody. There's probably a local college student who wants that extra 20 bucks, right?
Yep.
So have them do this on a Saturday, walk my property and FaceTime me. Something
Yeah.
that simple. You're helping somebody make a living. you're helping yourself, you're saving yourself from making that trip. You have a list of things you want them to do when they do their unit walk, or they're your annual or monthly inspector. They go to the property, your PM walks them to every vacant unit. So you see a rent roll, you pull it up and it says, shows 8 vacant units. Have your buddy who you're paying walk those vacant units and give you a video. Nothing like video that shows, oh, before and after, this is what actually happened. Or walk the perimeter, drive the perimeter and say, okay, trash is not picked up. I don't know, this is showing signs of neglect. This is the curb appeal isn't great. How am I going to get new residents to fill up these vacant units? So never underestimate the power of local asset management. And if it's not you, that's okay. Hire somebody who will be glad to do that for you. And you're also training them in the process. Who knows? Maybe they have a career in the future in real estate. And so now you help somebody, you've helped yourself. You might have even saved yourself a trip or two.
Yeah.
And effectively asset manage this property. But location is still everything in real estate. Never forget that. That's the one thing you can't change. You can't move a building. So make sure you don't compromise on your location criteria. And the second thing is your debt, right? Like today, and we're talking January 2024, rates are a little bit high. It's nice to have a fixed rate interest loan, but you're kind of stuck with it. And even a 1% difference in your loan on a $20 million loan, you're like 200K off, right? So that's a lot of money. So decide what kind of loan structure makes sense and what kind of exit penalty is involved. So you sign up for a loan today, 5.5%, 6% loan, and in 3 years you want to sell it, rates are lower. Nobody's going to want to assume your loan, and your prepay is going to be very high unless you have a plan for that. So plan your exit strategy. Begin with the end in mind.
Yeah. Yeah, and that's one good thing. A good mortgage broker is, to have a relationship with. Having these vendors is very powerful. We bought a couple properties there in Dallas, and our trash vendor, he said, we bought this property, and I met him out there, and he said, you don't need to have 2 pickups here a week. He goes, they're half full each time. He goes, you just need to do 1 a week right now. And, I hadn't thought about that because we had bought the building. We're going to re-tenant it and completely clean it. And he goes, why don't you just have us come out once a week? We'll take care of the existing tenants. And when you get the building full, we'll go back to 2 a week. And, I honestly hadn't thought about that. That's why you have a good vendor and a good vendor list. So, and having a good commercial mortgage company, which, by the way, we've got Icon Capital. We're partners with BMC Capital there in Dallas. If you need a good mortgage broker, I can help you out. And actually, I should introduce you to everybody over there because they're great.
Yeah.
They have their own bank too. But yeah, understanding your expenses and where can you cut them, and talking to your vendors is key. So.
Yeah, every vendor is key, but also no matter how much you love a vendor, make sure on an annual basis you review all your contracts because some people get comfortable because you've used them forever. And things like landscape, they could charge you $2,500 or they could charge you $1,500. So if you get 3 competitive bids and you say you get to stay in the business if you're within 10% of this bid, because we love you as a vendor, you've done great service for us. We don't really want to switch, but we can't afford to pay such a big difference, right? So you want to review those on an annual basis before you do your budgets.
All right. Do you have anything in closing statements?
Give yourself a deadline and take action. Don't drift. Don't be in the same place a year from today. Whatever are your list of questions or concerns, list them. Find the people who can address them for you, who have been in that business, who are qualified to answer those questions. Arrange those meetings with them and make a decision. Say, by April 1st, I'm going to have a decision, go, no go, and I'm going to go after it. Otherwise, you'll just drift and not make any progress.
That's spot on. That's a good place to close it out. So, well, thank you for coming on today. I very much appreciate it. I'm going to put your contact information down below. So if anybody's thinking about investing or has questions on investing, they can reach out to you direct, or they can surely put it in the comments, and I'll make sure that you see it there. So
thank you so much, Joe. This has been a great conversation. It's lovely talking to another operator who truly understands the business.
I love the business. It's in my DNA. So thank you very much. For those of you watching, if you could, please give us a like if you appreciate what we've done here today. If you haven't done so, make sure you subscribe. We'll see you again next week.